Hey there, and welcome to Retirement Reimagined. I'm Tiffany Nyiri, Senior Living Specialist, and this is the podcast where we flip the script on senior living. Whether you're a retiree ready to take on a new adventure or just curious about how to make the most of your golden years, you're in the right place. Join me and our amazing expert guests as we dive into everything from hitting the road in an RV, getting your financial ducks in a row, exploring the perks of a reverse mortgage, or just figuring out how to link that smartphone to your car. We're here to inspire, inform, and give you practical tips to live your best retired life. So buckle up, tune in, and let's reimagine what retirement can truly be. Hi there. Welcome to Retirement Reimagined. I'm Tiffany Nyiri. I own Active Lending Group, and we're here to bust some myths about reverse mortgages and talk about the process. What I hear out on the street. People ask me questions all the time, and some of it leads to really in-depth conversations, which I appreciate. I actually invite people that are skeptics of reverse mortgages to come chat with me because I love to hear what happened to give them a bad taste in their mouth, so to speak, for reverse mortgages. And then, of course, we talk about how reverse mortgages are new and improved and extremely conservative. Back in the day, they were not conservative. You could raise your hand and you could utilize, golly, 80% of the value of your home. Nowadays, it's very different. So, we're going to hit on a few things and I hope you enjoy. So, let's talk about busting some myths real quick because a lot of people still think that the bank is going to take my home if I do a reverse mortgage. Well, I currently have a loan on my house and it's a regular loan, and the bank owns the portion of my home that they lent me. So I only owe the part, I own the part with the equity. Same with any type of loan. So the bank does not want your house back. The bank does not want my house back. That is a real pain in the rear end for them. Believe me, I've been on the other side before. We have taken people's homes away. Um, and the bank doesn't like to do it. It costs an enormous amount of money and it gives them bad publicity. So keep in mind, these loans are made for you to be able to keep your home. Okay, that is why they're so conservative. That was a very long version of busting the myth on the bank owned your home. Everybody's scenario is very, very different. So when I get talking about a certain subject on reverse mortgages, sometimes I go way outfield because I'm not talking to a certain person about their scenario. So let's pick a scenario. I always use my dad as a scenario. He was 75 at the time that we did his reverse mortgage, and he did own his house free and clear. By the way, you do not have to own your house free and clear. Okay. It is okay to have a loan. We will pay off that loan and put it into reverse mortgage. So dad has a house. Keep in mind, primary residence. And he hears me talking in the office. We work together. And his mindset was, oh gosh, reverse mortgages are bad because he's a real estate agent from 1969. So, of course, the miss back in the day, the loan was bad. Don't get me wrong, it was not a good loan. If you utilized it correctly, it could give you a lot of freedom in your retirement, but a lot of the times it was abused. So, back to dad. Um, Dad is hearing me talk about the strategy behind the reverse mortgage. Again, new and improved. So there are new things about it that my savvy homeowners are taking interest in, and I want to talk about it with you. So this is the strategy where you might not, quote, need the money, but you have an adventure or something that you would like to do in your retirement. And this is just the answer to making what you would like to do come true. So, backstory. Dad likes to buy properties in Mexico. He likes to buy bank-owned properties. This is what our family has done for a very long time, is bank-owned properties. So in Mexico, they have those as well. They just take a very long time. Year and a half is probably average. So in the meantime, he was using a line of credit to pay these houses, to buy the house. So let's say $70,000 was out, and he was paying on this line of credit each month. okay, because it requires a payment. Well, he didn't have an asset for that. So there was no return on his money. There was nothing. It was just money going out. And in Mexico, you're not guaranteed that purchase. So you're not guaranteed any money back on your 70,000. It could be you gave 70,000, you get 70,000 back minus attorney fees. So again, he needed a better strategy. And again, not everybody is buying property in Mexico, but put your own retirement ideas um, in the forefront. These could be possible is really what I'm trying to get to you. So anyway, he was utilizing the money. Well, he's retired, he's on fixed income, and now he's got this big debt on his line of credit. Well, we talk about a reverse mortgage and that the line of credit, not like the line of credit you get from a bank. Okay, it's a reverse line of credit. It's very different and super cool. So let's talk about that. He's doing a reverse mortgage line of credit. Okay, he doesn't really need any money out. We do end up doing a little bit of money out just because we're going to redo something with another property and it just made sense. So his situation is his house is worth 850,000. We got about 380 loan amount. Okay. That's not even 50%. Not even 50%. He's 75 years old. This loan is very conservative. So what he did is he utilizes the 70,000 to redo a condo of his, an investment property. And then when he sold the investment property, he paid back that 70,000. Again, he does this for strategic reasons. A lot of you do not need to pay the loan back, nor would you want to, because it's not a requirement. Anyway, getting back to this, 70,000 out, no money monthly, which you can do. You can do a combination of all kinds of cool things. And he did the line of credit. So he's got this line of credit for quite a bit of money, whatever's left over. And when he doesn't use it, if he doesn't use it, just say you don't use it, it grows with a 0.5% higher than the interest rate on your loan. So if you have $200,000 in there and 1 year at, let's say, 6%, you're getting $12,000 more available equity that you can use. So every time or every month, more equity is being released to you based upon the interest rate. Super cool. I can get into detail about that. It's much better when you see the growth and you can see what I talk about. We're very transparent. I would love to share my screen and we go over that sort of thing. So now when he buys a property in Mexico, money goes out and he's got no payment. He's still having fun. He's not worried in the back of his head about the payment that is coming up because, again, fixed income. So that is one scenario that's very, very cool. We're going to talk about another scenario where it really, really helped somebody. This gal had very little funds to live on. Very little. This is what we would call a need-based reverse mortgage. This person needed help. This one's pretty emotional because we changed her life, thank goodness, because she was using different credit cards to pay her bills. So she would open a new credit card with zero interest, transfer one over, and then start paying on that one and transfer it and transfer it and transfer it. She had about $50,000 in debt and she is 74. So this is very typical. Some of you might be thinking, oh, well, that's not me. And some of you may be thinking, oh my gosh, that is me, only because maybe something happened in your world. You lost a partner. This gal just didn't have a lot of money. She didn't have a partner. She doesn't have any children. She was left this house. Her grandfather built it a long time ago. It needed a lot of work, which we were able to do a set aside so that she could get the painting done, the patios done. There was a door she couldn't even go out because the patio was not there. So before we could close the loan, we needed to make sure that we had that all in order. It was a very difficult situation on my part to navigate all of this, but it had to be done. This poor woman needed some help. So anyway, Happy part of all of this is this gal now had the money to do the repairs on her home. She gets money per month to supplement her income. Uh, she was able to get a cell phone. She didn't even have a cell phone that she would turn on. It was terrible. Anyway, she could go out to lunch with her girlfriends. So we got quite a bit of money up front. And then we had a set aside for repairs. She got $1,000 a month. She has a line of credit for about $250,000 that has the growth factor that I was talking about in the previous video, where it grows the longer you leave it in there, the more access to your equity that you have should you need it. Now, I don't advise people to just, book a cruise for a year or anything like that, but it is there when something goes wrong with your home so that you don't have to call the kids, call your sister, that sort of thing, because now you are independent. You are using the equity you have earned to make sure the house is in good condition as well as live your best life. So if you're somebody that may be not living your best life, own a home over 62, quite a bit of equity. Let's talk about your scenario. Everybody's different. Let's get the word reverse mortgage to be a good word, just like conventional mortgage, FHA mortgage, VA mortgage. It should be exactly the same feeling as those loans, because VA loans not for everybody. Got to be a veteran. Maybe people don't want to serve. They can't have a veteran loan. Okay, so it's very different, but again, it's customizable. And I'm so happy that this gal got to take advantage of upfront funds, monthly funds until she passes or leaves the home, and of course, her line of credit. Now, keep in mind, this line of credit has no payment. It is not like your HELOC, home equity line of credit. It is not that. All right. It's very different. It's very cool. I could talk about it all day long. So, what we do, if you have a question, we can do a video chat, or you can come to my office, or I can come to you, and we look at what your scenario looks like. What do you need? What do you want? How old are you? How much equity? What's our value of our home? Let's look at these things and let's customize something for you and show you pros and cons. And we look at it and go, okay, you are 75 years old. So the algorithm goes to 100 years old, just like life insurance. So you can live longer. Don't worry. You don't have to get out if you're 100. Believe it or not, I actually have the adult children um, asking about reverse mortgages for their parents because they're giving money monthly to their parents to just live, and which is great. That's a great family thing to do. However, that money is now being taken out of the adult children's family to supplement income for their parents. And again, it's not a bad thing, but if the parents could be on their own, it would probably help them feel a little bit better. And they could go do things without someone maybe going, oh my gosh, I just gave you $1,000 and now you decided to go, blow it at Disneyland for 3 days. Okay, maybe not a good scenario, but it is something like that. You don't want someone hovering over you if they're giving you money and looking at all your finances. So if this is something that is resonating with you, or you just have questions because you have heard reverse mortgages are bad, I beg to differ. They are not bad, but they are not for everybody. This is why you raise your hand. We look to see if it's something good for you. And then we go over your scenario. I can't say it enough. Your scenario, not your auntie's scenario back in 1980. None of that. New scenario, new you. We go over it, we customize it. So I get asked a lot about the process of the reverse mortgage. And it might be different for everybody depending upon what your house has. For instance, if it does need some repairs, we might have to get a repair set aside. If it's good to go, then it might close 30 days. So again, everybody is different. This is why I invite you to come sit with me, whether it's on video, in my office, in your home, uh, maybe even a Starbucks, my treat. And then we talk about what's going on. What do we need? How much do we need? How much equity do we have? These sort of things all matter. The older you are, the more you are allowed to take out of your equity, even though it's going to be very, very conservative. I told the story about my dad, not even 50% at 75 years old, not even close to 50% at 75 years old. So these loans are very conservative, but the process is actually very simple. I get the question a lot, well, how much income do I need? The answer is very little, very little, because we don't have a house payment that we have to add in there. Taxes, insurance, any HOA you may have are the main debts for the home. And then, of course, any debts that you have outside of that, car payment, motor home. I hope you don't have any student loans still, but some people do. Student loans can last forever. So any debts that you may have. And we think about, are you able to pay your taxes, insurance, and your debts based upon the money you have? Some people know, because like the gal I spoke about a little bit ago, she had no money. She couldn't pay all her bills. She was in a negative every single month. So what we do is we allow you to qualify based upon the income of your loan. So if you have a line of credit, I get to give you money for that each month on paper. Um, and it's kind of interesting how we get to do that. But a lot of the times, income doesn't matter. We can work it out if you have enough equity. So that question I get a lot, because older adults of the reverse mortgage recipients, so my adult children, come to me and say, oh my gosh, my mom only makes like $800 a month. Okay, well, let's talk about that. Let's talk it through. Let's do some quick numbers, and then we can expand on those. So again, most of the time it's doable, even if someone's making $800 a month in their Social Security or their pension. So that is always a good question, but the process is simple. We help you fill out the application. You collect a little bit of documentation for us, not as much as you would with a traditional loan. And once that is done, you do counseling. Counseling is very important, and it didn't exist back in the day when these loans were not as good. Now, counseling is done by a HUD certified counselor over the phone, not in person. Some states it's in person. California, Arizona, over the phone. So we are lucky with that. But the counseling basically goes over your debts and your income, but they also make sure that I did my job explaining your worksheet to you, which of course I did, because I love talking about it, and why not go over it in detail? So I am very confident when you go into counseling that you're not going to have very many questions, and they're not going to say anything new to you that I already haven't discussed. So the process is checks and balances along the way, which I like. These are all new checks and balances. So counseling needs to be done 7 full days, and then we can order your appraisal. Appraisal is done by a third party that we don't have any control over. However, or whomever comes out, like it's a I don't get to choose. Used to be able to choose, and now it is done on a non-biased scale, so that we're just getting an appraiser, hopefully in your area, which we like to get one that's in the area. Then once the appraisal comes back, that is what really, excuse me, that is what really tells us where we're going to be with how much money we can have, because that tells us our value. So we go with value. How much do we owe, if any? What is our age? And the market at the time really tells us how much money that we can either get monthly, lump sum, or in a line of credit. And once we get the appraisal, everything's pretty good by then. We're probably already in underwriting. We have all of our ducks in a row. We have all our documents. We're doing good. So it's really only going to take a couple days from that to get our full approval. And if we have some conditions, we go get those. Typically, it's pretty clean. And then you get your loan documents and you sign with a notary at wherever suits you. So it's, again, a fairly simple process. Some people, it's a little bit more difficult. Like the gal I spoke about before, she needed a lot of work, over $100,000. So um, that was a little bit more complicated, but she's on board. She understood. She got the work done. She's a happy camper. But you have to give your trust, and you have to know what's going on. I pride myself in educating, so that you know exactly why I'm asking for something and what it means. So again, the process pretty cool, pretty easy. Um, Most everybody qualifies. Let's talk about credit. Oh my gosh, I can't believe I didn't talk about credit. Oh my gosh, my credit isn't that good. Not a problem. They don't necessarily look at credit scores. They look at lines of credit. So if we had something recent in the last 12 months, we are going to have to explain that. And I help with that, talking you through what happened. And if it is going to happen again, that might be a problem. But we probably should only have problems in the past, because the underwriter wants to be sure that you're going to be able to pay your taxes, insurance, and HOA moving forward. So again, credit score is not as important as the body of your credit report. All right. If things happened way in the past, we might have to explain it, but that's okay. It didn't happen again. So again, I do this again. We're not looking for perfect credit. We're not looking for perfect income. We're looking for people that have 62 plus, owner occupied, quite a bit of equity, quite a bit of equity. All right. Now, in my next episode, I'm going to talk about buying a house under the umbrella of reverse. It's very cool because most people think that you're refinancing your current house. Not true. We have other options for you. Let's talk about reverse for purchase. Did you know you can buy a house under the umbrella of reverse? Well, I'll tell you what, most people don't know this, even my realtors. They are so excited when I invite them to my seminar and we talk about reverse for purchase. So let's say this is one of my really great examples of a real life scenario. You're living in Riverside and your spouse passes and you're all alone in Riverside. You don't have family in Riverside. You were only there for their job. And your daughter and your grandkids live in San Diego. Well, from Riverside, that's probably a good 2 hours away. And there's always traffic. So you would love to buy in San Diego. Love it. However, San Diego is very pricey. So let's see what happens here. If you sell your home, you're going to get 500,000 in your hand. Okay. Everything's paid off. Realtor's paid. Everything you owe is paid. You get $500,000 to go shopping, and you would love to be able to pay cash or something, in the realm of what you have, and maybe small loan. Well, you're not going to find anything in San Diego. You might find something in Fallbrook, which is still an hour outside of San Diego, and it doesn't have any amenities. You are now a widow or widower, and your family is in San Diego. You certainly don't want to be living in the middle of nowhere. So let's not buy there because you could pay cash. The idea behind it is you can take that $500,000 and you can go today. I'm doing today's numbers. You can go buy something for maybe, depending on your age, 800,000, 750, and get a loan for the remainder. under the umbrella of reverse, which means you're paying taxes, insurance, and HOA, if any, not a house payment. Okay? So you do not have to settle in your retirement years. You do not. You just have to raise your hand and ask about the reverse for purchase. Now, I have a lot of kids asking about this because they want their family members to live close to them, but they don't, maybe no one really wants to cohabitate together because everybody wants their freedom, which is understandable. So this gal, she got, at the time, she got an $800,000 condo. Mind you, this was a while ago. She got an $800,000 condo for $400,000 down. Okay. All of these reverse for purchases require a large down. Okay. And at the time, the market was a little bit different, and she could put 50% down. So $800,000 condo, 400 down. We have an extra $100,000, don't we? So one of the buyer's wish list is that she could put money back in her account, liquid funds, because her husband was very sick when they passed. And it took a lot of their savings, and she was just feeling very uncomfortable. So she wanted a little nest egg. She wanted to live by her kids, and she wanted to start over. So we got her the cutest little condo in her own little community with activities, new friends, new hobbies, couple miles from her grandkids and her daughter. And she is a happy camper after dealing with some illness with her husband, the passing of him, not very much money left. We made lemonade out of lemons. So it's a good loan, again, for the right person, but you need to know what's out there for you. And if you don't ask questions, you're not going to know what really applies to you. And I can't say it enough. Raise your hand, ask questions. We're here for you. Take care, everybody. Thanks for tuning in to Retirement Reimagined. I hope today's episode gave you some great tips to elevate your retirement. If you enjoyed the show, be sure to subscribe so you never miss an episode. And if you found our discussion helpful, please leave a review. It helps others find the podcast too. Curious about how to unlock new financial opportunities in retirement? I'd love to chat and explore how we can make your golden years even brighter. Until next time, I'm Tiffany Nyiri. Keep reimagining.